Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning, good afternoon. Welcome back to another live stream. And for a very big day, we have some big geopolitical stuff happening over the weekend out of Colombia and China, causing some big market slides here. And S&P 500 is down 2% this morning. NASDAQ's down 3.5%, went as far down, by the way, as 5% in the pre-market. Big move lower on tech stocks. We also see the Dow Jones here slightly lower. The Russell's down a little bit. The Japanese stock market dropping by 3.75%. We had some rate hikes out of Japan recently. The VIX is up 44%. It is not a sleepy Monday. It is a busy Monday here with markets making some pretty big moves. We're going to talk a little bit about why all these moves are happening. We'll also discuss some of the price action that's going on. You've got gold here off of its highs, but holding up decently well. You might say, how is gold down today? Well, again, if I told you the tech stock world is down 3.5%, but gold is only down 0.6%, you might feel a little bit differently. Gold is actually doing pretty well in what is, potentially a little bit of a liquidation event. A lot of people selling a lot of stuff. Usually gold does go down too when everybody sells a bunch of stuff. Simply because it is a means of a way to raise cash if that is something that investors are looking to do. Sometimes that can be confusing to traders, but sometimes when you have big geopolitical or big growth scares, initially gold can drop simply because people are grabbing for cash everywhere they can. Stocks, gold, bonds, all can be kind of collabing at the same time on that front. Yields are down here this morning. The 2-year yield, the 10-year yield, stocks again getting a little bit beat up, and I'll talk a little bit about why all of this is happening. If you're just tuning in, yeah, it's a bit of a big question mark, specifically around the Chinese AI model DeepSeek that was kind of dropped. I believe it was dropped on Christmas Day, but it got a little bit of attention over the weekend, or actually on Friday and over the weekend as well, because it seems to, at least what the market is doing right now, it seems to be selling now, asking questions later, which is apparently there's rumors, there's the possibility that this Chinese AI or Chinese large language model has many of the same strengths, if not has better productivity or results than some of the AI large language models like OpenAI, etc. That is a fear event, because what it does is says, well, if the Chinese have something and they're working with a smaller budget, and then these U.S. tech companies, which are throwing massive amounts of money. I think it's Google is spending like $50 billion a year on AI development. So the point is that has investors, traders, selling now, asking questions later about this stuff. That's only one half of it. The other half of it was that the U.S., I guess, was trying to deport people into Colombia, and the Colombian government refused to allow them to return to the country. And Trump, in response to that, had a very quick tariff boost against Colombia, which I believe there's a lot of coffee imports that come from Colombia. So I'm actually just curious. I have not looked at it, but is Starbucks reacting to this? Not too much. I was wondering if Starbucks, because of course it requires a lot of coffee, I wonder if there's some impact there. Anyways, NAS 100 down here about 3.6% to start the day. It's a pretty good sell-off. I mean, and this is mild compared to specifically the semiconductor ETF, SMH, which I've made a post in our Telegram channel, which, by the way, if you're not in our Telegram channel, it is free to join. the Telegram channel, I made this little post here this morning about let's see, we have a stock Telegram channel. So I put this post in our Telegram, feeling so grateful because what happened on Friday is I actually got trailed out of my SMH long positions, which is a semiconductor ETF. Nvidia, AMD, Qualcomm, Broadcom, all those companies are in the same ETF, the SMH FANEC semiconductor ETF. Well, I bought that. It went up a lot, and then I trailed out of the trade here. And then I'm very grateful that I did because it gapped open much, much lower here this morning. Have you guys seen Nvidia? By the way, if you want to join that Telegram, we'll drop the link in the chat. Nvidia, right? Down 12% this morning. Big drop for Nvidia. I mean, that's a huge company. So to lose 12% in a day for such a large US company is pretty serious. I think that right now I'm going to take the wild or the educated guess. I think the market is a little bit overreacting, but that does not mean that it can't drop more in the meantime. Like we could very well see a couple days here where the market continues to drop on this concern, on this news surrounding the AI out of China, all the tariff concerns, plenty of things kind of erupted, causing fear to spike. I mean, that is why we see the VIX making a massive jump from mid 14s all the way up to 21. So 21 VIX shows you that the market's volatility levels substantially jumped, at least from where they were in recent weeks. So, you're getting a bit of a volatility spike here. S&P is down 2%, 2.15%. Nas down 3.6. So tech stocks are really dragging the index lower. Take a look at XLK. This is a technology ETF. This thing is down 4.43%. And with that cash that I raised through the SMH position getting sold out of, again, I'm feeling so good that I did that. I trailed out right there on Friday, and now this massive gap happened. The question is, do I want to buy right back into this, or is there something else out there? Well, there's a couple things I'm looking at. I'm also looking at oil longs here this morning. I might take some trades on oil. I've got lots of things setting up for possible trade entries to start out this week. I have a feeling it's going to be a busy week, and I've got some stuff on the watch list that I'm currently looking at, specifically oil. May take a stab at the NASDAQ, may take a stab at the Dow Jones. Got lots of stuff that I'm currently looking at. So we will have to have a look at that. It's going to be a very interesting couple days, to say the least. We have big tech earnings. We have the FOMC meeting event. And of course, we have this geopolitical bomb drop that we had over the weekend. So no shortage of volatility. I hope that you'll stick around. If you enjoy my commentary, I'm going to have a really busy week. I already know it. If you guys could do me a really solid favor and hit that thumbs up button on the live stream wherever you're watching, it really just helps to support the content here that we're working so hard to, all the research and all the time that goes into this. And then of course the live stream behind the scenes work that we do. If you appreciate it, we certainly would appreciate your support just with the thumbs up button on the stream. Also, real quick, I do want to mention that we are kicking off a major sale on the Edge Finder. If you tried it out last week, we had a period where people could try out the Edge Finder. We are currently doing a 30% off discount on the Edge Finder for a very limited time. If you are somebody who is interested in picking up a copy of the Edge Finder, we're doing 30% off. And during this stream only, check this out, you can currently get 35% off if you send us a direct message on our website. Hit us up on our site. You'll chat directly with a support team member on our team who can get you that 35% off discount and get you some information about the tool. Again, we had a lot of people who tried it out last week. We had some incredible feedback from the community. We had like thousands of people try out the tool last week, which was really cool. So if you enjoyed your trial there of checking out the software, do not miss the opportunity to get a major discount on the Edge Finder, 35% off for a very limited time for those watching this stream right now. Take advantage, get yourself some great tools. If you enjoyed that period, we, again, like I said, we really appreciated the feedback that we got from the community, and we are just onwards and upwards from here in terms of stuff that we are looking to add and improve on the software. So thank you for your feedback, and take your chance, again, like I said, to get 35% off the tool for a very limited time. Okay, let's keep moving on. So I like some setups here. I'm very curious to see how the opening kind of reaction here this morning is. S&P 500, I am out of my trade, stopped out of my trade, but curious to see how price action responds in the opening hour. I like the idea of actually getting long the NASDAQ. Potentially, I'm going to watch this price action here out of the gate, down 3% on the day. I mean, these rumors out of the Chinese, deep whatever, right? Deep seek AI, who knows how valid they really are? I mean, there's speculation that it could be very strong, but there's also speculation that the Chinese models are piggybacking off things like ChatGPT and using their outputs in order to kind of add on to them, if that makes sense. So what I mean by that is, and I have no basis for this. This is just some rumors, some speculation that I've heard out there, which is that the Chinese AI takes the outputs and the strengths of things like ChatGPT, the OpenAI AI stuff out of the US, and actually just kind of adds on to it rather than completely built from itself or built by itself without the help of any US stuff. So who knows what the truth is? I think right now the market is taking a sell now, ask questions later approach to this news, as well as to the tariff stuff out of Colombia. The US dollar, let's take a look really quick there. US dollar is sinking a little bit lower here this morning, down 0.3%. The Japanese yen looking very strong, taking its place as the rightful kind of, defensive or risk off currency right now. Many yen pairs getting hit as the Bank of Japan actually raising interest rates. Meanwhile, many other places looking to cut them. So yen seeing a little bit of strength coming into the picture. I'm going to watch this NAS out the gate. Like I said, I actually like the idea of potentially picking up a long position on the NASDAQ, and I would not be surprised if we do see a bounce from these levels. We saw a really big spike off of this area. Curious to see how price action plays out here today. Big drop, a lot of fear in this market, and the VIX, like I said, spiking 40% is usually, not always, but usually an opportunity to potentially fade that, right? We could see a VIX just kind of roll over here and just kind of drop from here, or we could see it kind of spike higher. But I think that the final resting place, whether it be now or a more suspended move, I think a lower VIX is probably in the cards. So I'm going to look for opportunities to maybe capitalize on heightened volatility. What I mean by that is I may take an opportunity to short some puts, short some options out there on the market. But going to watch this NASDAQ close. That's probably this and oil are two setups that I really like right now. In fact, I'm actually going to pull the trigger on some oil longs as we speak. So I'm going to go ahead and do that before I get too far. Now, let me just say, when I take these trades on stream, this is just a trade. I could be wrong on this idea. I could be right on it. One trade does not define, the overall profitability of a strategy or an approach, but I do like oil to the upside here. So I'm going to go ahead and get a position started on this one. So bear with me as I do this. It's going to take me a second to punch in these orders and get them set up on stream. In the meantime, if you'd like to get all the notifications of trades that I'm taking in Discord, you can sign up for our VIP room where all trades are shared throughout the week and all updates. So what I'm going to do here is I'm going to, off screen, I'm buying some USO, my brokerage account. So let's see. And again, this is the difficulty of trying to stream and trade at the same time. It is quite difficult for me just because I have to focus on what I'm doing, but also, kind of comment on it. Let's see. So I want a stop loss on this of about 3.8%. So let's do USO. 3.8%. Okay, so that's going to put us at 76.40. Okay. And bear with me. Like I said, I am making some trades right now. I'm buying USO, which is an ETF. Okay, I'm going to place that 3.8%. Stops there. Looking for a bounce on oil here. Okay, so that trade, what I'm going to need to do now is just make a public notification within our Discord channel. Like I said earlier, if you're not already in the Discord and you'd like to get those notifications sent to your phone, I will be updating these trades throughout the week. I have a long position on oil just set up. I'm going to take this trade here. This goes under commodity trades. Again, bear with me as I punch this order in. Okay. And this is definitely more of a swing trade. This is not a day trade. This is not like a right now, or nothing trade, but punching in this oil trade now. Back to key support plus 50% retracement level. After breaking out of consolidation last few months. Stops below market structure. Strong U.S. economic data suggests demand could remain strong for oil. Okay. Okay, that is in. So I took a new trade on oil. I also referenced something within the Edge Finder that I liked here, which is, again, the economic heat map, which overall continues to suggest a relatively risk-on environment, which is something that I want to prioritize being long commodities like oil, which typically can do well in an environment where that is the case. Okay, so that is in the group just now. NAS still down 3%, getting some good reaction here or some good rejection off of support. I really like to see that. I'm going to continue to watch this this level here around 20,800. See if we test back on it. I'm not in a rush on this because I still have some long positions. I'm still long Bitcoin, despite this stop getting hit. The issue is I'm trading it through IBIT, so I still have a position open on Bitcoin, so I need to do that. This is how these streams go when usually I don't have a lot of trades and all of a sudden I have a ton of stuff to do. So I'm going to be very, very busy here updating and kind of managing existing positions that I have. Like I said a moment ago, the economic heat map, generally speaking right now, suggests more blue than red, which is a key indicator that I look at, showcasing basically more risk-on oriented assets or something that I want to be long. So when we get these dips like today, these are actually opportunities, in my opinion, to look for some good opportunities. I could be dead wrong and early to these ideas. Nothing I say is financial advice. I'm not here to tell you what to do with your account, but this is what I look at, right? I look at data and I make educated guesses about where I think markets are going. NASDAQ, Dow, US oil, those are some of the things that I'm currently watching. UK 100 is also interesting. So these are some of the trades currently I'm looking at. By the way, Edge Finder, I mentioned earlier, 35% off during the live stream. Click the link being dropped in the chat. Take advantage of this massive discount we're doing on the Edge Finder. We appreciated everybody for giving us some feedback last week on the tool who tried it out. We had a period where you could try the tool out. We are currently now offering 35% off for a very short period of time. Take advantage of that. If you've been thinking about getting a copy of the Edge Finder, there is your chance. 35% off if you click the link being dropped in the chat. Should also be in the description down below, or you can go to a1trading.com and live chat with us there. Someone from our support team can get you hooked up and started with the tool for a massive discount. Okay, taking a look at gold here, pulling back just a little bit, but kind of not making the big moves here today. Big moves are definitely more oriented towards NASDAQ, Bitcoin, oil prices making moves. TLT is rebounding very nicely. This has been sitting in my portfolio for some time and finally coming back to life. Still in the red on this trade, but with yields falling here this morning, You've got TLT up a little bit. If that keeps going up, what I'm going to do is probably sell a call against my position, collect some premium on that. So I'm watching TLT. Currency land, you've got dollar index continuing to drop. Let's see, look at that dollar underneath support here. Could actually see a bigger pullback, although my opinion, I'd actually look to add to some long positions that I have in the dollar index if we get a larger drop, but no rush to do so, right? So we could actually see dollar index move lower here for a few days or even a week or two. Depends what happens with the Fed, though. The Fed could come out real hawkish and spike this dollar. So I still like the upside for the dollar index, but where it's currently trading, we've got a nice break to the downside here. In the short run, sellers may take a chance to take this down back to like 106. I would not be surprised by that. Price action seems short-term bearish, longer term still nice uptrend that I'm looking to participate in if I can. I'm going to keep watching this NASDAQ again. That's kind of top of mind for me here this morning, is to see if we can get a bit of a retracement here on the NAS, in which case I might actually look to take some long positions. In fact, I don't even hate where it currently is for possible longs. I still think we're headed to new highs. So this is about a 4.4% discount off of those highs. Hit that trend line here and is bouncing. Going to keep watching this because I might, like I said, I'm probably going to get long the NASDAQ. I'm just going to see if I can find the right entry. If I can't, I can't. And that will be fine too. Still got my long on Bitcoin here. So let me make an update about that too for those in the group. Okay. I'm going to adjust my stop loss here to 97,500. Okay. 97,500. I'm going to do the same thing for IBIT. So currently trading about 3.58%. Oh, I'm not logged in. I got to do it on my brokerage. Okay. So still in my Bitcoin trade here. Stop loss has just been slightly modified just below this spike low here that happened this morning. So still in the Bitcoin trade. Going to see if we fade that gap and close it. Bitcoin looking really healthy compared to some of the other stuff out there. Definitely don't hate that. Let's see, where else are we looking? TLT, nice bounce, like I said. Let's see, TLT, I'm still in the red on this trade, but this has come back pretty good. Where's my, there we go. Yeah, I mean, so still down 1,600 bucks on this, but you guys, if you've been watching, at one point I was down like $4,000 or $5,000 on this TLT position. So nice little bounce back on that. We'll see if that can continue to spike. S&P down 1.7 now, NAS down 2.9. Going to keep watching this, see what happens. Silver down 0.7. SLV, I have a sell put on this one that expires. My gosh. The thing about for my trading strategy is it's either nothing's going on or when it's raining, it's pouring. I just got so many things to do here on the account. Silver, nice little bounce back here this morning, up $830 on these short puts that I've got with expiration out to February 7th. I got a little bit of time left on that option, but if we get up into like the 75, 80% of max profit level on my SLV short puts, I may actually just take profits on those. So I still think that we could get a nice bounce on silver. Love this reaction here. This candle here on the 4-hour chart looks pretty good. VIX dropping, look at that down. Well, I mean, it's still up a lot today, but 29% up rather than at one point where it was up 50% on the day, which was crazy. NASDAQ, again, bouncing back. Still going to watch this one for a possible entry. I went long oil here this morning. Stop loss about 3.8% away from current price level. We'll see if we get a bounce on oil. That would be just basically here with the oil long idea. If you get a, failure to hold even the 61.8% retracement, I want nothing to do with that price action, and I would stop out. If we can get a bounce here, what I'll do is I'll look to trail stop loss into profit. All updates that I make on that trade will be shared inside of our Discord channel, which is linked in the description down below of this video. Let's see what else we got on the watch list here. So again, I'm watching NASDAQ. Let me take a look at the Dow Jones for this possible setup as well. And Edge Finder here, let me just clarify what I'm doing here, what this concept is. I am looking at the Edge Finder as my system to help me spot trade ideas. And then I use the technical analysis side of things to actually enter and manage positions as things go. So also, if you're saying something in the chat to me, I apologize. I'm not ignoring you. It is just simply not a day where I can read chat on top of everything else. I just got so many things alerting me right now. So going to keep watching NAS. I'm long oil. Let me take a look at the Dow Jones. Dow Jones, very nice bounce back here. Look at that. Beautiful rejection off of that little bounce, little pullback that we saw. It's really tech that's getting hit today. You've got XLK still down 3.65%. Semiconductors, how are they reacting? Still under pressure. You can see that this area of the market is not green. Meanwhile, other places are, just showing the pressures here for the deep seek, the Chinese large language model. Whether those fears are valid or not, I guess we'll see over some of the coming weeks. But we'll have to keep going and come back to that later. That's something that I think has potential to be, it's a threat, but I think it's actually potential to be overdone in the short term. But we will see. Let's see. We got I think we got Forex James coming on. So let me get out of the way, guys. If you want to trade with me inside of the group, I'm going to be very active the next hour or so. If you want to keep up to date with everything I'm doing in the markets, join the VIP room. It is a service that we offer where you can see every trade that I am taking, as well as the rest of our team here at A1. So join VIP if you're interested, but also don't miss the discount. Also, if you want VIP, you can also get it at 35% off. We'll just go ahead and make that available for today only. If you want 35% off the VIP room, or if you want access to the Edge Finder, all of it is available for a very short time at such limited discounted prices. Send us a DM on our website, a1trading.com. A support rep can get you set up with a membership or with access to the Edge Finder, so you can trade alongside myself and the team, or get access to our tools that we're using to spot trades in the market. Don't miss it. With that said, I'm going to take a quick break, let James take over the show here, and he is up next. Stay tuned.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 Trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
Hello guys, how's everyone doing? I hope you're all having a great start to the week. Hope you had good weekends. So I'm just taking over Ivan's spot for today. So apologies for anyone that might be disappointed, but here I am. So we had a bit of a crazy market open. Obviously, I'm sure I wasn't watching Nick's segment actually beforehand, but I'm sure he went through the DeepSeek things with tech and all that fun stuff, so I won't go over it again. I'll just move straight on to what I'm doing. So I'm currently still in euro pound positions. This one has been, oh my god, it was such a difficult trade to hold and manage, but luckily almost back to average price. So I'm looking to close out euro pound pretty soon. The fundamentals aren't best, but we've had a relatively healthy pullback, and I would expect this to continue slightly lower. How far? No idea. I know Citibank has currently got a very similar position on that I do, and they're looking for the multi-year lows down at 0.825. So there is potential to hold it down to that level, but to be honest, I think I need to just get out and recalibrate a little bit. Dollar Swiss, also in still in my long position here. That's not looking too good right now. It's a little bit precarious, to say the least. Euro dollar shorts, I'm still in, still on my, what do you call it? Still on my euro dollar short tangent, I guess you could call it, or whatever. So yeah, still in this one. Now, you might have noticed a slight theme that I am very heavy long dollar. So I'm also in pound dollar shorts. So I'm going to show you a different trade that I'm in that's a little bit counter to what my normal narrative of long dollar. So I also took a New Zealand US dollar long position this morning. And the reason for that one is essentially, let me just pull it up here. Essentially just copying HSBC. So what this does, this puts me in a relatively solid trade. It might not work out. I've taken quite low risk on this one, but it just diversifies me a little bit. So obviously I'm quite heavy long dollar. So I've also now got a position at short dollar. So if the dollar does continue down to 105, at least, my portfolio is not completely in the red. So we've got the HSBC G10 FX trade idea here. They've opened New Zealand dollar buys. They're currently in drawdown with obviously target and stop loss. I'm not going to read all this rationale. I actually uploaded a video on my YouTube channel today covering this trade idea. So essentially just following them, very, very simple. But if we move on to a different report, this one's from MUFG, they're in an opposite position, essentially. So they are currently short on pound dollar. So again, I'm not going to read all this, but their trade idea is we are sticking with our short cable. So for anyone that doesn't know, cable is like the nickname for pound dollar. So they're sticking with their short position trade, even though the pair has rebounded over the past week. So we've got two conflicting bits of information. We've got HSBC that's bearish on the US dollar, short term anyway. We've got MUFG that's remains bullish on the US dollar. So we're playing both sides. So we'll see how this plays out. Hardcore hedge. No, this is about as far. I generally don't hedge, but when I am in this many positions, especially going with the dollar, I'm happy to take one hedging position just to balance out my portfolio a little bit. Can you open NASDAQ? I just opened the live now. Yes, so we saw what essentially was just a pretty strong risk-off move when the markets opened, and that was a reaction off DeepSeek. So if we look at the VIX, here we had a this is actually almost corrected now. But when the markets opened, we had a large spike to the upside on the VIX, showing that volatility was up. We had a large spike down on the S&P, a large spike down on NASDAQ, as well. I'm not sure if the Nikkei did. Yeah, the Nikkei did. We saw the yen get quite strong as well. So we did see a large move in the markets. Now this was due to the DeepSeek. So if you don't know what I should probably preface, I'm not a stock guy. I don't pay attention to what's going on in the stock world really. So my understanding on this is very limited. I think you've got Chris coming on after that might be able to give you a bit of a better insight. But essentially, DeepSeek is an AI that's come out of China. It's like ChatGPT or Claude or, all the other ones that we've got these days. But it was built, I think they built the whole thing and launched it for around $6 million. Bearing in mind, ChatGPT is hundreds of millions. So I think at the moment we're seeing investors like, well, why are we putting so much money into AI if it can be built with a fraction of the price that the West is doing it with? That's the way I see it. As again, I'm not really involved in that side of trading, but yeah, we'll see. So those reports from my Discord, we send them out every day. DeepSeek sucks. I've not used DeepSeek. I've got no idea. I just know it definitely took an impact there. I think we're going to see a recovery. This move hasn't been, I mean, it was a big move, but it wasn't a trend changing move. It wasn't anything too drastic. It was, actually, let's see, how big was this? So it was almost 3.5% drop on the S&P, which, again, it is quite large, but it's nothing that is a huge concern in terms of the long-term trend being broken. So I'm quite happy at the moment to say that we are going to see a correction of this move. I think it was just, a very quick, fearful move by investors rather than it being a trend change. However, what we do have that could be another hit to the indices market is FOMC on Wednesday. So I would expect Powell to come out and say that he's happy to continue the rate cut slowdown, essentially. So we know that in the WEF speech, Trump said he wants rate cuts immediately. I don't think Powell is going to submit to Trump that easily. I don't think we're going to see Powell come out and say, oh, Trump wants rate cuts, we're going to start cutting rates more aggressively. I think it's very likely that Powell will come out and say he's not influenced by Trump. He's going to continue on the path that is best for inflation and best for interest rates. And we'll see a hold and then a more neutral to hawkish tone. That's my prediction. I could be completely wrong, but that's what I'm assuming. Obviously, in that case, we will very likely see the S&P and the NAS start to fall. 1,000% tariffs. Yeah, that'd be interesting. Reinforcement learning, supervised, and the AI. Oh, sorry, and it's the future for AI. That's why US investors are scrambling. Okay, interesting. Thoughts on gold? Yeah, I don't know. I'm a little bit conflicted on gold. There's not much at the moment. Let me just double check the Edge Finder. But yeah, I don't think there's anything really that drives me towards buying or selling gold. So in this situation, when there's not something super clear to the downside on gold, I will automatically start looking to go long, just because that's the trajectory of gold. Generally, I mean, it is moving to the upside on the long term, so I'm going to trade with that same direction. So there's nothing that is telling me specifically you need to short gold now because of X, Y, and Z. Yeah, I will default to going long. So in this situation, I'm quite happy to look at the previous level of previous level of resistance, which, if we get the retest, will turn into support, and then buy on this break and retest pattern, possibly taking price up to 2,800. I think is a sensible level in my view. But yeah, in terms of a super detailed macro idea, I just don't have one. There's nothing here for me at the moment. Lee, good to see you. Market Pulse. Sean, Alan Perez. Seeing some familiar faces in here. I'd rather see JP for president than the current Tangerine. Fair enough. Have you changed your mind on New Zealand dollar buy? Yes, I took a New Zealand dollar buy just to diversify a little bit, reduce some risk. Dollar Swiss is recovering. It is. Habib, it's good to see you as well. Yeah, US dollar is having a slight recovery, but do you trust it? Do I trust it? I don't know. You could argue we filled in this, whatever you want to call it. People call it FBGs, imbalances, impulsive moves, whatever you want to call it. I don't care. But I guess we've sort of filled that, which could be a sign that the dollar has sort of finished its downside and might head up. But if we look at it on a lot more of a simple way, which, to be honest, in my view is just easier, we have broken this level of structure. We did have a slight retest, if you want to call it that. We also created a lower high. So to be honest, 105.5 doesn't seem like a crazy idea. And then from there, obviously, this is the upside I've drawn here is assuming that Powell comes out quite hawkish. But yeah, we'll have to see. I'm not convinced on the dollar either way at this time, which is why I'm in a buy and a sell. SMC and ICT were scrambling their heads. New Zealand US dollar could be a nice position trade for later in the future. Yeah, I would quite like to get in some position trades, some long-term trades selling the dollar. I just don't think this strength is going to last much longer. I don't, there's no data that I have to really back up that idea at the moment, but FX markets and especially G10 currencies often act like they're attached to an elastic band. They don't just continue. It's not like gold or the S&P or Bitcoin where they can just rally and rally and rally and rally. Eventually, they will have some sort of bounce or pull back to an average price, which obviously isn't a strong trade idea, but it's just market behavior that is worth knowing or understanding at least. Best entries for a NAS 100 day trade. To be honest, I think you've missed that day trade already. If you were going to trade it, you would have been best buying the support that we've already bounced from. From here, I've got nothing. We're kind of in the middle of resistance and support. This is what I generally refer to as sort of no man's land, which I don't like to trade. I like to buy off support, sell off resistance, keep things very simple. Either way, it's a win for the Chinese. They've stamped their strong presence in AI. Yeah, it's interesting. Again, just referring back to the Trump World Economic Forum talk. He said he wants the US to be the capital of AI or something along those lines. And China comes out and derails that pretty quickly, which I think is quite funny. You just took profit looking for re-entry. Okay, good stuff. I use both fundamentals and technical. Use both fundamentals and techniques for 4 months now. Watch both you and Trading Nick make over 20,000% gain with a $200 account. Shavon, I'm happy to hear the first part, but I'm going to be honest, it's impossible to make a 20,000% return while managing risk, because you'd be taking what, $2.50 stop loss or $2.50 risk if you're using 1%. Either way, though, good work. Just make sure you don't get in a habit of being overly aggressive. Okay. So yeah, it seems like the dollar's having a slight recovery at the moment, which is nice to see. I'm quite happy about that. As I said, New Zealand US dollar is a pretty low risk position, which actually I can just oh, hey Nick.
Hey James, keep going. I'm still doing stuff.
Yeah, all good. So this is I mean, I don't know how many of you watch my segments regularly or not, but as I've been saying, I've had to move over to a spread betting account, which is this one on IG Market. So this is the New Zealand dollar trade. You can see it's only £81 risk, which is very, very small. Also in pound dollar here and euro dollar shorts as well. So playing both sides of the US dollar. But yeah, one of them specifically low risks. It goes against my overall bias on the dollar. So we'll see how it goes.
James, thanks for filling in. I really appreciate that. I saw you like jumped in and saved the day for me, so I appreciate that. You know how sometimes it is. You just have like 14 different things all kind of align at once, and then you're like, well, I got to go place all the trades. And from one trading streamer to another, I'm sure you can recognize like how difficult it is sometimes to be like placing trades, writing up descriptions of why you're trading, and also still streaming. So
yeah, absolutely.
I appreciate that. And I know you have food on the way, so I'll jump back in here, take back over. Thank you again. Appreciate it for coming in and filling in for me.
Yeah, no problem. Cheers, Nick. See you later, guys. Have a good day.
See ya. Okay, guys, I'm going to share my screen here as well. Kind of get back on board here. And again, shout out James. Guys, make sure to go follow him. We'll drop the link to his channel here in the chat. Really, really appreciate that. He jumped in just because he saw I was a little overwhelmed with tasks to do. So shout out James. NAS hasn't moved too far. I am long oil. I took a small position long oil. I'm still long TLT here. USO, I bought 1,000 shares of USO. So that is just my way of trading oil. I don't trade personally futures. I just trade ETFs because it allows me to do options on stuff. I'm also thinking about potentially playing some puts, like shorting some puts on stuff that I like. So I'm actually considering doing some of that here. In fact, let me just pull up SMH options. Let me just take a look at what we're looking at here, about 30 days out. Let's go 32 days out and see what we're working with here. So I'm looking at puts. I'd probably look at like the 235 puts. Let's just see what this would give here. It'd pay around a $6.90 premium, which would give you here. And what's the delta on that? Let me look at that. I'm just curious what the market's got that at. So 235 puts at a 36 delta, let's call it. Let me see. How many contracts would I do? Again, bear with me, guys. I know I'm not going to explain very well while I do this. I'm still very much in execution mode. So 1,000 shares times 235. Would I want to do that? Yeah, maybe. 235. Okay, so I get paid to short this put $6,900. Nice. So am I interested in doing that? Where's the VIX at? Yeah, see, VIX is kind of giving back a lot of its gains. I'm gonna keep an eye on that trade. That might be a trade that I place, an SMH trade. What I'm doing when I'm shorting a put, it is a bullish play. But what I'm also saying is essentially, if the market for SMH, which is the semiconductor ETF that I trade quite often, I'm saying at $235 per share, I'm willing to buy the shares of the underlying. So I would short the put. If the market goes up, sideways, slightly down, I would make money. If the market drops through that level, I would have to buy the shares and I would be initially filled at a loss. So it's a options trading strategy. I'm not going to try and explain that full here on the live stream, as it is not a very beginner. If you've never heard of options or you're not familiar with options, it's a lot to explain here. But basically, I am selling someone else a bearish bet, which is a bullish bet by proxy, I guess. Gold is down 1% here today. So seeing a little bit of sell pressure here alongside the rest of everything. Oil, like I said, I took a long position here. 50% retracement got tagged. Key level of support. I've been talking about this on the stream for a while. So I dipped my feet. I took an initial position here on oil. Stop loss is below market structure. So if we fail out here, if we can't find support at the 50 or the 61.8% retracement, then I will take that as my cue to exit the position for a loss. Oil is a very bullish reading on the Edge Finder currently. So is the NASDAQ and the Dow Jones. So these are areas that I am looking to play on dips here today. So that's why when I said earlier, a lot of stuff is setting up for me and I got just kind of overwhelmed with things to do. It's because I use the top setups algorithm. This is my trading system. So the Edge Finder is what I use. It is the why for why I take certain positions. I like the Dow Jones and the NASDAQ because they're getting strong readings on the Edge Finder when looking at key indicators like sentiment, technical readings, and economic data readings. These are the way we have programmed the software. It is interpreting these things as mostly bullish. That doesn't mean it's a guarantee they go up, but it's an educated kind of algorithm that makes an educated guess about the bias of each currency pair, index, or commodity. So oil getting a positive reading here. NAS and S&P. S&P is getting a bullish reading, but not as much of a consolidation of a confirmation, if you will, confluence. That's the word I'm looking for. Not as many confluences as NASDAQ and Dow Jones. So I am going to be watching those, which have had larger pullbacks here today. Anyways, NASDAQ down 2.8%. But I'm looking to see if we get any kind of flush down from here, I'll probably take a long position on the NASDAQ. Just going to wait for just a little bit more of a VIX spike here if we can get it. Otherwise, I'm not going to enter the trade. So that's kind of my cue. Just waiting to see if we can get a VIX peak up just a little bit here, in which case I think the risk reward becomes good enough that I'll take the position. What's your target? I don't have targets on my trades. When I take positions, I do not set take profits. I trail stops exclusively on my momentum trading strategy. The reason for that is because a good trend, you don't know when the end of it is, right? A really good trend, trying to call the end of a really good trend is like, it's like an oxymoron, right? When you're following a trend, you don't know where it ends. The trend can go longer than anybody thinks, but once it starts to actually reverse, that's where I exit the trend. So I don't use take profits, and that's not necessarily a holy grail by any means. Sometimes, for example, trend following with a trailing stop loss is the most frustrating thing in the world because you get trailed out for much less than the peak gain. So this morning, I actually closed out. I got taken out of my SPY long position, and you know the thing is, sometimes what happens is I shoulda, coulda, woulda just taken profits at the top, right? But instead the market dropped and I got trailed out. So my point with that is that trailing stops are not a holy grail. They're not perfect. They're not, this secret magical way to trade the markets, because they underperform when markets don't follow through, and they outperform when markets do follow through. And markets do not always follow through, and they do not always not follow through. Hopefully that makes sense. Rewind if you need to, but basically what I'm saying is that nothing is perfect. Exiting a trading, your exit strategy is very, up to your personal approach. For me, with the NASDAQ, I'll give you an outline of what I'd be looking for. If we get some pullback here where we've got a nice sell-off here today, I like the NASDAQ long. I don't mind sitting through consolidation. What I would mind would be, okay, market comes down here, fine, I'm long in the trade, stops down below. If we break that, exit the trade. Like, I'm done. I exit a trade when market structure seems no longer to be holding support levels that I'm watching. So I'm watching NAS. If I can get a long position, then what? What if it works out? What if I'm long here with a stop loss here? Well, if that happens and market comes down, tests around here, I'm fine with this. What I'd be looking for is to trail stops upon a breakout through highs, right? So with this breakout, if we can get a closure above like this, then I would take that stop loss and I would put it behind key levels of higher lows within that uptrend. So I use market structure pretty exclusively to manage positions that I'm in. It is not magic, and it is not why I enter trades. In fact, I would say that if I didn't use the edge finder, if I didn't have fundamental analysis, there would be little to no edge to what I'm doing. Fundamental analysis is the core component to finding an edge for my approach to the markets. I'm looking at key economic data. I'm looking at, what's happening in the world to drive trends as why I take positions. If I only ever pulled up a chart and traded off the chart, I would probably not make money. So, for me, if I only look at the charts can be deceiving. They can be hard to measure, right? I need something that gives me a more black and white reasoning for why something I believe could have more upside than downside, or more downside than upside, right? And so right now, when I filter the edge finder and remove neutral readings from it, what I'm seeing here is we're getting bearish readings for things like pound dollar, the Aussie dollar, the Kiwi dollar. That's telling me that most things here are factored in, looking at the trend of the market, GDP numbers, PMI numbers, retail sales. Is telling me most of those things agree that the dollar looks stronger than those other currencies. So I'd be more inclined to look for dollar long setups on the technical chart. So it's giving me a bias. That's why we call this the bias column. Then on the bullish side, things like the Dow Jones, the NASDAQ, oil, dollar CAD, these are things that I'd be more inclined to look for opportunities on the long side. So I'm marrying up the top setups algorithm, which is looking at tons of market data, economic data, technical and sentiment data. It's looking for confluences across all of those data points. And then after the why has been established within the top setups page, then I'm looking for the when. When do I want to enter? When do I want to exit? That's where technical analysis comes in. But if I skip the first step, if I skipped the why, skipped the algorithm that's helping me to interpret market trends and market data, the why is more important than the when, right? In fact, I would, if I could only have one or the other, fundamentals or technicals, I would just take fundamentals. Technicals are great for helping to know when to exit a position, but knowing which trends and why comes from fundamentals for my approach to trading. Options helps to smoothen out your P&L curve. I personally don't indulge in options. Alan, yeah, I mean, when you're on the put selling side, call selling side, which is something that I do very frequently. It does absolutely help to smoothen out equity curve just because there's such a high win rate to shorting options that are far out of the money. It doesn't mean it's not a holy grail, nothing is, but yeah, I mean, it's a part of my trading that helps to smoothen out kind of the infrequent wins. Look at Nvidia here for me, guys. A little bit frustrating. I've been sitting in this position for some time, and after all this time, it has come back to just about break even for me. Not fun when this happens because, again, this is kind of an investment at this point. I've held this for quite some time, and you can see investing is great when the market's just going straight up. But think about this, guys. I have not held the stock for this long, but imagine if you were somebody who had bought this stock all the way back to June of last year and held the stock, which carries a lot of risk for holding a stock for this long. You're break even, right? So you can just see like everything. There's a lot of recency bias and hindsight in markets. Investors, like ETF investors, buy and hold the SPY and never look back. That was great when the market is going straight up. It's awful when the market is going straight down, and it can lead to no returns for 10-year periods if you get a bad stretch in the stock market, right? So as an investor, if you're an investor, yes, that's great when the markets are working great, but you got Nvidia down 13% in one day, wiping out months and months and months of gains on this stock. So you got to be careful with whatever you're doing in the markets. Nothing is a holy grail, and patience and discipline is important no matter what you approach. Option selling, investing, day trading, scalping, swing trading, position trading. If there was an easy, one size fits all, never go through drawdown way of approaching the markets, trust me, we'd all be doing it. And if you find it, let me know. It'd be really nice to not have to go through drawdowns, but they are inevitable and you don't have to avoid them. I think avoiding drawdowns is a silly approach. Now, making your drawdowns bearable is a very wise thing. There's a big difference. You're going to have drawdowns, but can you appropriately size your position so that drawdowns don't kill you when they happen? That is what we need to distinguish as traders. You can't stop a drawdown from happening, but you can control how much risk you take so that when that drawdown comes along, it doesn't flip your ship upside down, if you know what I'm saying. So with that said, NAS and S&P still down on the day a good bit. I mean, came back some ways. NASDAQ down just shy of 3% here. At one point, it was down 5%. So we've had a bounce already. The question is now, is that bounce sustainable? Like, is this a sustained bottom in the market, or is this just a poke higher? Maybe to help me with that, we'll bring in some heavy hitting, some big guns here. We got Chris Pulver loaded in for the show here today. I'm curious to get his thoughts in just a second. We're going to take a quick break. Just a heads up, guys, I mentioned this earlier, but do not miss your chance. Edge Finder is currently 35% off during this live stream. If you're interested in picking up a copy, I mean, we don't sell coffee, but you should get a coffee. You should get a copy of the Edge Finder. Sit down, have your coffee, have your Edge Finder too. You know the old expression, you can't have your cake and eat it too. Well, with the Edge Finder, you can have your coffee and you can have your Edge Finder too. So doesn't make any sense, but you should pick up a copy. That's the long story short. This is a sales pitch, and it is a great one because this is a really great tool built by our team, but inspired by the community looking for better data to help find better opportunities in the markets through the efforts of economic data, technical reading, sentiment data, all at your fingertips. We like to think in the long run, the purpose or the goal here behind the Edge Finder is to bring retail traders hedge fund level stuff. And it's on its way. I wouldn't say that we're quite there, but every single day this software gets better. And, that's kind of the goal. So with that said, don't miss your chance. Pick up a copy of the Edge Finder, 35% off for a very limited time. We're going to be right back with Chris Pulver just after this. Check it out.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, If you're wondering what trades I'm taking and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right, we're back with the man, the myth, the legend, Chris Pulver. How's it going, man? Good to see you.
What's happening, Nick? How was your morning?
It was a little hectic, but I had a lot of orders I punched in this morning. And Chris, I gotta take my opportunity here while I can. Not everything is green for me, but one thing that's really positive today for me, I trailed out of SMH, which I use a trailing stop loss. I trailed out of SMH on Friday, and I literally felt like I just ran across the fire coals without burning my feet. Like it was like really, really fortunate. But anyways, I got other stuff that's in the red. I picked up a position on oil longs here this morning. What do you got going on? What's your reaction to all this?
Well, I think it found the market at its most vulnerable. If you take a look at the VIX, I mean, 2024, the big outliers that we had, which you can see today immediately, like the market is retreating, but like the VIX was up 45% at one point. There's your December 18th VIX, and there's your August 5th. This is the type of stuff where it's like you can clearly tell when the market is vulnerable. It's over the weekend, because the futures market were just tanking overnight, and a lot of that was attributed to like the Chinese AI DeepSeek, right? That's where the markets were taking the biggest hit. We were down 2+% in the S&P, almost 3+% on the Nasdaq. Now we're starting to it's like everything's red. Everything's red. I don't even have feeds on the percent change right now, which is weird for TradingView. One thing I did notice was interesting though. Equal weighted S&P, not even budged. Equal weighted Nasdaq, a fraction. So Q's way down. What I like is I had a lot of trades in for the last like 2-3 weeks that were basically up here for sells and down here for sells, and this little move today is looking a lot better for my profits to be rolling in. So I had a couple trades close out for profit already, and grabbed a nice little winner in the SPX today. I'm putting in some income trades where I'm basically doing like a trap. So I'm going to give this thing lots of flexibility where, look, nobody knows what this market wants to do. Is a little competition from Chinese AI enough to break the U.S. stock market? Probably not. So I think this is a bit of an overreaction. But the fact is, how we got to these recent highs, how the S&P got to those all-time highs, I was a little skeptical that we would sustain that type of like gap higher. But part of me was like, are we just going to have like a bubble this year? We're just going to have like a straight up melt up, and everything that Trump says and does is just like everything's great for the market? Maybe. But then today's a little dose of reality where it's like, okay, we do have some technicals. We do have the market that actually cares about some volatility. And you can clearly see how price sensitive things are. And this week, we got a ton of news, man. We've got earnings that are heating up this week with Mag 7 stocks. You've got Tesla, Microsoft, Meta, Apple, Visa, MasterCard, Fed on Wednesday with a rate that's not going to change, but what's the Fed going to say? And then Friday's PCE. So all those things will play into volatility this week.
Big thing there too, Chris, about just the tariff stuff, right? If we think about the reaction to the Colombia situation, I think that actually told you a little bit about how it told you two sides of the story. It told you how quick on the button Trump is going to be with it, which I think is the point here that is big, because Trump being quick on the button with slapping tariffs on anybody who gets in his way could potentially make the market. I think that was an initial reaction by the market, like, oh, so that first read on tariffs are going to be slow and steady rather than all of a sudden. Well, it introduced, I think, just a little bit of a, well, they're still very much real and potentially inflationary, and that could come at any second, and trying to predict it or getting a rollout plan from the Trump administration might be less clear than we thought. So doesn't necessarily mean that, like you said, this might not be the top of the U.S. stock market per se, but it does reintroduce some risk to uncertainty of when tariffs could come into the picture. The Chinese AI stuff as well, of course, is a risk to valuation. You can see there's some, as you mentioned already, some distributions here across the market are not even in terms of returns today, right? So you have SMH down a whopping The last time I checked, it was down. Yeah, look at this, almost 8% down here on the day. SMH.
Yep.
You take a look at XLK, right? So the challenge here today is tech stock valuation is what is under scrutiny right now.
Right.
You have like, okay, all this money going into US large language model stuff. And is it real? Is it not? I don't know. The Chinese AI stuff. How valid is their software? Is it piggybacking? I've heard speculation that it's piggybacking off of ChatGPT and US stuff. I've also heard that there's been third-party audits that have validated a lot of the stuff that it's doing. So that's where I think the market's just saying, who knows how real that AI model is, and if it is real, it poses a serious question to certain things. And final thought on that individual name that I think could get oversold on this news would be Meta, and the market already figured that out because I think Meta was like, who benefits from more competition in AI? Meta does, right? Like it would be better in their picture for US AI companies and distributors and chips and all that stuff. If there was more competition, prices could go down. That's just straight up better for those who are using AI and leveraging it, which I think Meta currently is like the best stock in the market doing so.
Sure. And look, there's always going to be winners and losers. I listened to a lot of content this weekend, and somebody I followed for a while, Jordy Visser, who used to be at Weiss Capital Management. Now he's just doing like Jordy Visser Labs. He is big on like AI agents and big in the deep seek, and he was talking about how amazing it is and that he's been using it.
Yeah.
Which I'm like, okay, cool, but I don't know what to make of that outside of the market's got to get out of its own way and it's got to grab the story again, right? Like 2023 was like Mag 7 recovery that led us out of the 2022 bear market. 2023 carried into 2024, which was, now we have AI potential. Now we have semiconductors and NVIDIA, and then market cap just got crazy high concentrated. So are we going to rotate away from Mag 7 into small cap AI? I mean, I don't know. And so I'm not really sure where to be throwing tons of money because I don't know what the story of 2025 is yet. I think we just have a volatility story, and I'm trying to make some sense of things. But I just look back at, we've had a 2.5-year bull market after a 15+ year bull market. I just don't think it's going to be the easiest melt up. And if we have a melt up, we're going into another bubble. I think you and I talked about that offline.
Mm-hmm.
That's where I'm at this year. Is a lot of defined risk, a lot of playing some income games, and just try to trade it as safely as I can. I don't have anything that I like that's like all in. I think gold's a good play, silver's a good play, Bitcoin with protection's a good play, but you're going to have a lot of volatility in tech. Because if who knows, like could everything tech and Mag 7 be disturbed? Like if Mag 7 doesn't perform this year, it's 30+% of the entire market in the S&P. So with that concentration, it is going to drag the market down. There's nowhere to hide. If you have like the entire 30+% of the largest companies in the world that are struggling or getting repositioned, like it's going to be an ugly transition as people get out of Mag 7 into other stuff. So who knows? It'd be ugly.
While you said that, Chris, that made me think of something. If we could switch to my screen for just a second.
Yeah, sure.
Let's do a study. Just as you were kind of saying that, it made me think, okay, let's look at a day. You said, what's the theme for 2025? Well, let's just take a look at today. I like to actually look at what the winners and losers are of the day. You mentioned winners and losers. Well, let's take a look at some sectors. So today we have the consumer staples up. That makes sense, right? A little bit of optimism for a place in the market that has been very depressed here recently. Healthcare is also up yet again. You have regional banks up, with yields kind of falling. Comm services up. Real estate is modestly flat. Financials flat as well, XLY. So these days can be kind of interesting because it can tell you where the market's kind of feel is. And it seems like the most heavy hit are tech, right? Semiconductors. And here's an interesting one. Utilities getting hit off the back of this because, again, a less demand for or a changing landscape for the AI trade could also hurt utility companies, which have a lot of their earnings calls, a lot of their hype has been around, well, utilities could service that industry. That's a known, right? If there's a bigger demand for energy, and the power companies could do quite well in that. Technology also down 3.6%, industrials down 1.4%. So, your winners today are consumer staples, healthcare. These are kind of exactly what you would expect, but then regional banks, comm services, and real estate. So just wanted to point that out because sometimes it can be interesting to look at that divergence. You also have on relative strength, you've got European stocks doing okay, which are more banking centric, more value centric types of companies, whereas US is innovation and growth. You also have Germany kind of flat on the day, Japanese stocks down as well. So just taking a full look, and maybe here is one thing that I'm attracted to, Chris, is look at the Russell. The Russell in all of this is a winner. Through the full year so far, Russell has been a winner through January, to many people's surprise. So maybe to your thought of like, hey, we've had a melt up here event for the last few years. What's the landscape look like? Well, maybe S&P and Qs kind of take a break here this year, and you see some final resolution, so some conviction to the Russell trade if yields do in fact fall and you get inflation kind of falling down. Who knows? But I actually think that the Russell still looks good for 2025 personally.
Yeah, in fact, let me take a look at that. I just put a trade in on Microsoft. That is a 417 expiration. I'm just going to get that added in for a pulver alerts here. Just give me a second. So 417 expiration. So another income opportunity on Microsoft. I want to take a look at IWM right now since we would have had a gap lower on that one. Is it enough? I mean, it really didn't budge. Yeah, I was going to say if it was back down, I thought we were gapping a little bit lower on IWM, but we didn't. I mean, the Dow, same thing. So Dow is right there, like not even budged. S&P not really budged. Qs and S&P moving the most. Dow and Russell not really moving. So shoot, I was just thinking. I know I have some trades running on IWM. It's a March and May. These are 1-1-1 trades. So it's an income trade. I mean, if it doesn't end up getting back down to like 190 or 190 for March and May, then I just collect the income. I do have shares that I own IWM at 200. My cost basis is already down to like 192, but I have a covered call at 225 that I'm not really doing anything with right now. I might just hang on to it a little bit, but I have to dig a little bit deeper in the portfolio today. Look at some rolls potentially. I know on NVIDIA, because we had a huge gap to the downside today at 124. Let me check on NVIDIA. I have a couple of collar trades running, and I know on 3 accounts in particular, my NVIDIA debit should have been, let me go to NVIDIA. My NVIDIA, what's my ownership? It's like I own it at like 130. I just need to find my tracker here. Give me a second. There we go. Okay, so 130.08, but my debit on the 125 put is $4.20. So let me just take a look here really quickly. So there's my 140 by 125. Now, what I want to look at here is what is my 125 put trading for? Right now, it's already up $765, which shows that I got in for 415 to 420. But if I close this, okay, I can close this for a nice fat profit of $11.75. Let's just do the math on that. I can lower my cost basis of NVIDIA and reestablish my collar trade. I think I'm gonna do that right now because that big jump and that big gap, I think that NVIDIA could still go lower, but this is gonna be like an immediate reaction to it. So if I have 1190 minus the 415 that I paid for it, I'm lowering my cost basis on NVIDIA by $7.75. Well, that puts me down to 123 ownership wise, which is actually right at current price. I can still do another collar trade. So let me see if this is worth rolling either the entire thing, or I just take the profit on the put side, close out the call side for some partial profit as well. This is the stuff I'm gonna have to be doing today. So my covered call at 140 is already up $1,000. Yep. So net on this position. I don't know if I could roll this, but let's find out. If I roll this, I think I want to roll this like down, and that would allow me to close out the 125 by 140 for profit. That would allow me to roll for another. I don't really want to roll it by another 20 days though. Let's see here. So I think, I don't know. I don't want to like talk through this and bore everybody, but this is stuff I need to take a close look at because by the numbers, I have profit on the long put, which was my collar trade, right? So I've got the sell call and the buy put, and with a big move like that, I think it's worth looking at protection and taking some of the trade off and then reestablishing the collar that I think is fair based around a current break even.
Yep.
So I'm going to
I
do that
like
on
it,
a couple
Chris.
of
And
accounts.
I've been saying this, don't even worry about it. If you have to chill and place trades, I got you. I had someone step in earlier. James joined the stream because I was like, dude, I just got so many trades I got to play. So it is a busy morning. I just took a long position on the S&P 500 also. I'm still keeping some cash on the sidelines, but I'm going to be actually, let me just change this 4 hour. Let me change this visual visibility. Let's do current interval and above. Yeah, liking the reaction here on the S&P 500, real long wick. And he said it earlier. I don't necessarily think that this is the piece that crashes the market. A little competition in the AI trade. So I'm still, I've been cautiously bullish for some time, but I like the risk reward here. And if we take out those lows, I'm going to take a loss. It's not a huge position, but I've got it running here. I'm going to go ahead and punch this into our VIP room. Chris mentioned it earlier, but you can see all the trades that Chris and I are taking within the Pulver alerts and VIP service offered by A1 Trading. If you'd like some information about that, we'll drop the link to chat directly with our support team in the live stream chat. You can speak with our team there. Someone from our group can get you set up with all the information on trades that we are taking and why. Like I said, I am going to take a quick trade here on the S&P. Let me see, new trade. So bear with us, guys.
Yeah, while you're doing that, Nick, I'm doing the same thing on mine because I put an income trade in for Microsoft.
Okay.
So I've got that posted as well. I'm getting it posted right now.
Nice.
Last week, I also put on some trades on SPX, which is looking really good right now, actually.
It's real strong, yeah.
So I'll get this put in.
Yeah, I mean, the thing is, it's one of those things. You said it earlier. Do we have the recipe for an obvious melt up this year? I would say no, but we still have a bull market. We still have demand for stuff. You can see it today. I don't care to buy the absolute bottom of this dip, but that is a quick bounce off of that. It looks really strong. So I'm just gonna, put a stop loss below it, and if it doesn't work out, it doesn't work out. Let me just update this here in the group. So my entry is around 6, and I closed out my trade from last few weeks, trailed out of that this morning. So I'm just kind of re-entering that idea at a lower price. So let me see, stop level here, 58.99. I'm just going to type this up here. So let me do this. So very strong bounce off of key support here this morning. I personally believe the deep seek AI fears are a bit out of proportion. A little competition may actually be a good thing. And I don't know. Again, nobody knows for sure how real, how strong the AI stuff out of China really is. There's like I said, but I think that perhaps, as often is the case, markets are selling now, asking questions later, and the fear may not actually match the reality of it. So I've got to stop in on this trade. If it doesn't work out, it doesn't work out. I'm still long Bitcoin. This is also bouncing very nicely here this morning. Held support, but it was messy. You can see we came down to this area here around 100,000, dipped underneath 100,000, but buyers came back in. So the reaction here this morning, I would say, is pretty good across a lot of risk assets.
What this does leave us, though, this leaves us with a potential island candle, right? So this week, with all the volatility that we could have with some of the earnings, the Fed, and then inflation data, the market might decide to stay somehow inside this, giant gap, and we might have the market's inability to find the highs or the lows, but we just kind of stay inside this area. Or this is just enough to kind of sit here and justify, okay, hey, this is a dip. Everyone's excited about buying the dip. This is a gap fill that we filled finally, 3 gaps to the downside of the 4 that we established after CPI, and 3 of them got filled today. So we have a bit of an island gap, and I'd say the bulls or bears. If the bulls can overtake that to fill the upside, then we know that it was a buy the dip kind of week. Also, look at this just from a clean technical standpoint. If I'm right in this channel where this was a high, the market has pulled right back to it, right? And I said this last week. I said, look, we could have a halfway point where the market's now going to justify a bit of a dip to buy, or this is hit the highs, hit the lows, and the market just comes all the way back down. But if we're reacting off that halfway point, filling some of those gaps, right now it seems like the market is a bit of a buy the dip. But again, I would put a lot of caution out there for like buying the dip with just crazy aggressive toss money at it. It's like I can't guarantee a bottom here. There's nowhere even close to it. We're still not at a discount that I would say I'd want to be putting a lot more capital on the line. I'm still sitting around 40 to 45% cash. I did have about an $18,000 P&L swing today in my favor. So I was down, 20 grand this morning. Now I'm only down $800. So that's a pretty nice swing.
Wow, that's phenomenal.
Yeah. So I mean, I really don't have a drawdown. I don't really have a drawdown at all today, which I'm obviously very happy with. So
yeah, I'm down 1.75% today, which again, considering I got out of my SMH trade, and actually just, by the way, just a second ago, re-entered it. I got out of the way of it. I'm buying back in. Had I taken the full loss there, that would have made my day a lot more red than it was. So
for sure.
And I'm sitting on some really good gains here recently. So we'll see how it plays out. But ended up trailing stops saved my butt here this morning with that SMH, because of course dropping over the weekend, right? 7.4%. Again, I'm just gonna put my money where my mouth is with that deep seek stuff. I think it's a little overblown. I think the market's trying to figure it out and selling first, asking questions later. I think once you ask some questions, there might be like okay, did China really just beat us on a $6 million budget? I don't know. I think there's a lot of smart people in America that would say there's some holes in that theory.
Yeah.
Unless the Chinese are just, but if the Chinese are so smart, why is their stock market just devastated? And again, I still think the Chinese stock market has upside, but it's not like they're just leaps and bounds better than America on AI, in my opinion. We'll see if I'm right. Could be wrong.
On that side, though, I mean, I was looking at the China stocks this morning. They are all up for now. Yeah. I mean, and there's a lot more to prove. There's a lot more to prove, right? That you're fine, but I think for the healthier global economy, look, China being up, it shouldn't be like U.S. versus China. It's like the global economy will benefit from both countries doing well. But we're always frenemies, right? We're always frenemies. We can't be in cahoots and like, oh, China's doing well and the U.S. is doing well. But if money supply is pretty consistent, if there's another round of stimulus coming in March for China, not just an AI play here, not just like, they're undermining the US and it's like now the US is down and China's up. Look, China has been like, everyone's calling it uninvestable, which I don't agree with. I just think you just got to pick high quality stocks that are just beat up and give them a chance. But look, I've taken paper cuts along the way from Alibaba and Baidu for the last year or so. Had a big pop obviously in September last year. Had some follow through that allowed me to get out of some of that exposure. So now it's pretty concentrated. I mean, JD, I'm looking at turning like $1,000 profit on JD, Alibaba and Baidu. I mean, I've got some diagonal spreads and some longer term plays on those, and I have some shares. So I mean, I'm getting some upside on these, which is fine. There's still a long ways to go, and also Alibaba and Baidu doesn't necessarily mean AI. It's just like, okay, if China's looking better, like those would be one of the few stocks that I would be considered like safe to trade. But I don't think that China, that all of a sudden undermines the U.S. is going to be like, okay, China's up, U.S. is down. It's like, I think they both have to do well for the overall broader global economy to do well. The one thing that's been surprising me has been the DAX. So it's not the Dixie, but the Dixie's down, which is totally fine, and that's also pulling a U.S. 10-year down as well. But the DAX has been really surprisingly bullish. And I would say I would almost look at this and say I'm a little skeptical on how much higher this thing can go, because we are stretched a long ways away from that 200 moving average and that blow off move we had since a little dip in December of last year. I don't know. It's a weird stock or a weird index. I mean, this is. FTSE did the same thing for the UK. We had a big blast off move since the lows in December. There's the DAX with that little pullback in December, and it's just been ripping higher. I mean, it's outperformed the S&P since that dip in a big way. So anyway, a lot of stuff going on, but there's some non-US flows, that's for sure. Today, I think that
the China thing, Chris, too, is actually I'm actually feeling pretty positive about China for 2025. And obviously it's a little easier to say that when Chinese stocks are up for the day, but I have been in that camp here for a while. I know you and I have talked about playing around with China stocks for a while, but
Yep.
and I've definitely been early to that idea. However, you listen to Trump talk about China, he seemed pretty soft on China last time he spoke about them, and that was pretty big, I think, for a lot of the hopes that, hey, maybe China versus U.S. is a thing that will work past in years to come, rather than escalate. I mean, he seemed way harder on, in my opinion, from my reaction to that thing we listened to together last week. He seemed way stronger on EU and Canada and Mexico than he did on China and Russia. And him and Putin have been sending each other love letters recently, like speaking positively about one another when asked. So, Putin dropped, he said, he basically said something very positive about Trump, and Trump said positive things about President Xi and Putin. So who knows what's going to happen there if that materializes to anything. But what that signals to, I think, me and most investors would just be, well, they both seem like they want to make a deal happen. And if that happens, Chinese stocks, US stocks, they don't have to be enemies necessarily. They can actually kind of coexist, and maybe Chinese exposure is a nice diversification thing for a year like 2025, where Chinese stocks have been crushed for so many years. US stocks have been ripping so much. Maybe there's a mean reversion between the two of them.
Yeah, and not only that, but some of the just wild stats are the US stock market has outperformed the world by like 3 standard deviations. So I mean, anything that's if you're going to where, like, it's the Wayne Gretzky thing, right? It's like, go to where the puck is going to be, not where it's
Right.
at. So it's like, if there's money that's going to be going to asymmetry, it's not in the US.
Yeah.
Like, we have had a ridiculous run, and getting out of 2022 especially. I mean, the indexes alone went up like 70 to 80% from the bottom in October 2022 to now. You look at the valuations that we have, we are historically hitting some high levels that we haven't seen in the last 30, 40 years. And when we did hit those valuations, the markets weren't great. So if money is going to flow into asymmetry opportunities, it's not in the US. So it is in China, it is in Europe, or it's anywhere. I mean, it could be anything emerging market, it could be anything small cap, it could be anything where it's just, you got to diversify a little bit. So I think that the scary dark cloud over the market is like 30+% in Mag 7. That if that crumbles or just gets a little flaky, that's enough to make the S&P go nowhere. And then there's no opportunity unless people are leaving Mag 7 and then allocating elsewhere. But like I said, I think a non-US allocation is good for diversification. We've talked about energy a lot, but energy is, I don't know if it's a good play or not. Like Trump, I mean, we listened to him like, I'm really disappointed that the Saudi Arabia didn't lower oil prices. It's like, doesn't really work like that. You don't just tell the Fed to lower interest rates. You don't just tell, Saudi Arabia to lower oil prices. Like there's global forces at play here. But again, you can say one thing and the markets do what they want. So I'm actually, so you reestablished SMH this morning. You did? Yeah.
Yep. I just got back into it.
Okay. Do you have anything on SOXX at all? In the same
No,
space as SMH? No. Okay.
I don't.
Okay. Cause I think SOXX is a
Less
little bit.
less concentrated on NVIDIA. Yeah.
Yes, it's less concentrated. Also has a lot more like infrastructure, like AI infrastructure plays. But is this also? I'm just trying to think. Like, I'll do some research on this. But are we getting the immediate reaction because the U.S. was so caught up in like LLM, and all of a sudden this is like, well, all that's irrelevant now? Is that kind of what this DeepSeek is showing? It's all just, it's open source, and for a fraction of what you're getting, like these co-pilots and chat GPTs and other thing for like $200 a month that are now like 90% discounted. That's what DeepSeek is kind of showing us.
Yeah, seems
Okay.
like it. I mean, that's the worst case fears, right? The fear
Yeah.
is like, oh, but I saw something, Chris. This is just a side note. I saw something that someone had posted somewhere where it was like using the DeepSeek AI thing. It asked a question and it accidentally said like the user asked the question, "What model are you?" and it responded with Chat GPT initially, and they changed it later. So that was like a little bit of a speculation. That's what I mean by like sell first, ask questions later. Like, who
Yeah.
knows how
Yeah.
real that is, or how
Yep.
it's just hard to call.
Okay. I'm going to take a look at SOXX and see. So we had that big flash in August. If I could do some type of creative income trade here, if the IV is high enough, I could get something back into this area. I'm a little hesitant to say I want to throw money at it. Like, hey, I'm willing to own the shares, but I think I could have like a high probability income trade that would unlikely have assignment. I mean, this could be support, resistance, and the reaction today is that we come down to, let's say, 210, and then we come back up and fill the gap, and this is just a bunch of noise. But if I had something where like 190 or less would be any type of ownership, I think I could repair this. Let me see what a 30-day covered call looks like. I'm always testing that type of stuff. We do have decent expirations. They're not weekly, but I could go monthly. I don't love that, but at the money, I get like $6 to $9. I think SMH might actually be a little bit better to trade, but SMH is way more concentrated in NVIDIA. There's better expirations here. Here's 32 days out. Yeah, get $10 to $11. Yeah, I think I'm going to take SMH. Let me see what I can look at here. So SMH, take a look at that August low from last year, and August low around $200. Anything less than that would be fine. So anything under 200, I might start my bear put spread there, do like a little trap trade. Let's see if this credit looks okay. So 200 or 200. Okay. So let's see what the premiums look like. They might be okay. They might be garbage, but we'll find out.
My first stab on SMH here. I'm playing it a little differently than you, Chris.
Okay.
I am just going to. I straight up bought the shares. I guess I could, if I wanted to get fancy, I could sell covered calls on them. But I'm just gonna play it from a simple stop loss position. I've got this entry here around support, around 240, 241. My bet, my speculation, I am speculating here, is that I think that this is a little overdone. That I think that this is not necessarily a China just completely surpassed us in the race, came out of nowhere and passes. I don't necessarily think that's the case, but I could always be wrong. That's why I got to stop on this idea. So basically, if we break through this level, I'll stop out around 230 and probably would try again down in the 215s. So that's the way I'll play it, as I'll play this zone to zone. If we bounce, great. I'll look to try and take these things back to the highs once more and trail a stop behind it. And if we fail out, if we completely are actually going to see some larger selling in the SMH, I will look to stop out and potentially reestablish another position down around 215. So that's my play on SMH.
All right. I've got one. I just entered it, so I will share this as well. So what I'm going to do is, I said 200 is a pretty nice spot. So I'm just going to do a pretty much a strict income trade right now. And it is, let me just type it up in the chart. So I'm doing I think we're doing an April expiration, March 21st. So I only have to go out 53 days, which is okay. So I'm going out March 21st. March 21st. All right. So 3/21 expiration. I'm buying the 200 put and I'm selling the 195 put and I'm selling the 190 put. I want to say those are the right legs. Nope. 215, 210, 200. Okay. 215, 210, 215 by 210. And I'll explain how this works. And then a 200. So if I do take any assignment on this, I got $1.13 income. So it's credit on this trade. And then I'm going to say willing to own 100 shares. So I will own 100 shares if needed, and that would be a repair trade. So if we come, actually, let me take that back. That was a symmetry trade, and I'll put in another box for my important level. So that trade would be my profit trap. So from 215 to 200, that's the trade that I'm in right now. So the way this works is I have a 215 by 210. That's a bear put spread. So that is basically, if price is below 210, I get $500 on that trade per contract because it's $5 wide. So I get that as a profit trap. And so if price is in here, this is my sweet spot. If price is sideways, I keep the $1.13. If price goes up, I keep the $1.13. If price goes down, I keep the $1.13. If price goes down into my green zone, this potentially maxes out at $6.13. So that's my max profit opportunity. The way this is going to look on a chart would be, this would be real price. There's my trade. I'm pulling in the credit here. So I've got credit. I have a bit of a trap, and then I have risk. Now I'm willing to take the risk because I'm willing to own this as an ETF and repair the trade. But I'm collecting $1.13 up front. I have a $5 profit trap plus my $1.13. So this max profit is $6.13 if price is less than 210 but greater than 200. That's how this trade works. So it's an income trade. I mean, you'll make more money with owning shares, and if it goes up, if
it goes up, right?
Exactly, it goes up. So I'm trading the income side where it's like, look, if this thing's going to dump, I get another. I I get some flexibility on that trade, right? I get some wiggle room and margin for error where this thing could drop another 18 to 19% in order for me to say, well, now I'm going to have some shares. I'm going to own it, which I'm okay with, but I
Yep.
get a lot of margin for error.
And long story short, for the audience to think about this too, when you take the options approach, I know that sounds a little bit complex if you're a new options trader, but what Chris just did there too is he gave himself way more ways to make money than I did, right? So although my approach will just straight up benefit if I make the right call on SMH moving higher, Chris's scenario has many different shots on goal, if you will, like many different ways for him to win on that trade. Even if the market goes nowhere, he can make money. So there are times for both. Chris and I both do options in our own unique ways. But definitely would encourage everybody who's listening, if you are not already in the Pulver Alert service, you can get trades sent to you from Chris. He has a full guide for users to check out to learn more about options. If they are scary to you, trust me, they sound worse than they actually are. They're not that complicated. They can be made complicated, just like everything in trading, but there's some relative simple truths about options that are quite awesome that Chris and I love to utilize. Chris, if you'd like to keep going, go for it. If you want to share some more ideas, but otherwise, I think I'm going to hop off soon. What do you want to do?
I'll go a little bit longer. Is there anybody on after me? We had
I don't think
Dr.
so.
Okay, we had was it Dr. Greg last week?
What Dr. Greg you're talking about, right?
Yeah, is he coming back on?
Let's see. Let's check the schedule really quick.
Okay. If not, I mean, I'm happy to run another 10. I've got another class at 11:30, so I can run for another 10, 15, 20 minutes or so.
Yeah, go 10, 15 minutes. You got nobody else behind you, at least
Okay.
from the schedule on our site.
Cool. From current price. Okay, I'll get that SMH posted in Pulver Alerts. We'll take a look at a couple others. I might look at that NVIDIA trade as well, because I think with that big flush and big gap lower, I could do nothing and just let it get protected. But because of that, quick move in Delta, and then that you got the gamma squeeze as well, that allows me to maybe reposition my NVIDIA, lower my cost basis even further, which if I'm comfortable at like the 115 area, which I am on NVIDIA, 115 I think is a good spot to be bottoming out ish, and then getting back up towards all-time highs maybe in the coming months. But anyway, I'll get that posted. So from
good.
Current price. All right, Nick. Thanks, sir.
You keep going. You got it from here.
Okay. Thanks, dude.
All right. See you guys.
See ya. So that trade on SMH, I'm just going to look at the numbers here. It is a 93% chance of profit. So we have 93% probability of profit. I have a $600 profit trap. I'm willing to take the risk on the trade. I'm only putting this on in margin accounts, by the way, so I wouldn't do this in a cash account. That's a lot of cash getting tied up in SMH. But a margin account, I'm okay with. It ties up less buying power, and I can play around with it a little bit. So 93% chance of profit, which is going to be the income side. I'm willing to own the shares. If assigned, I'm just finishing up the Pulver Alert right now. If assigned, break even is, and I would take the 210 would be my $200 would be the assignment, minus 5 and minus $1.13. I'd own shares at 193.87. Okay, which is actually 20+% off of current price. So not only would we have to drop from current price, okay, we'd have to drop another from current price, another 19%, but from the recent all-time highs, we'd have to be dropping, 30+% off of all-time highs. I'm not saying that we can't do that. But looking at this high to low, if this market just stays sideways or stays, let's say, sideways this way, okay, if we just chop in this area, then this is an income trade. And like Nick was mentioning, I mean, this trade gives me about 4 out of 5 ways to make money. And even if my 5th way that I would potentially lose, I'm willing to take on the shares and own and then repair. And how do I do that? Well, if I took on the shares, I add a covered call. I can add a long put as well for protection, and then try to get it called away for $5 or $10 profit. The easiest way, to me, would be, I don't want to put a collar trade on necessarily, but I feel like I would have to. It's like if this thing is going to drop hard and then be in like all of a sudden a bear market for semiconductors because this rip is not without having some type of downturn. I mean, it would make some sense to me that if all this is doing is running from low to high, at the very least, we have a high, low, lower high, lower low. If that happens in semiconductors, I mean, anything in like the 180 to 170 zone, I would say very excited about maybe holding some SMH a little bit more. I'd still say like medium term. I'm not long term really on anything. But if I'm willing to own it, I'm willing to own it. But I think we have some chop in here. I'll look for some income opportunities. The implied volatility is a little bit higher because it is so weighted in Nvidia. Nvidia is down quite a bit today. All right, but that trade it's about to be posted. Let me see if I got a picture in here. So I've got to put in the disclaimer coming in hot, and a picture to go with it. And there we go. Okay, so pictures in, SMH is in. So SMH is posted, Microsoft is posted, and we have a bunch of earnings this week. I do want to actually look and see. I feel like we have so many gaps out now that it kind of messed up my initial earnings plays as well. So I was looking more in the meat of the week on, let's say, this is a trade that I took last week, by the way. This was my trade on SPX. So SPX with a middle price around 600. So I've got a call. It's a call condor above and a put condor below. That doesn't mean anything. The names are stupid, but basically I'm looking for some income trade with a profit trap on both sides. If price stays in the middle, this only went out for about 30 days or so, 30 to 45 days. Actually, March might be 50 some days out right now. But I want to see if price just kind of stays in this range, give myself a profit trap. That trade was taken last week on Friday. I was looking at an earnings right here. So here's our earnings where things get a little bit more interesting. There's some notables on Tuesday. I mean, Royal Caribbean has been just a rocket to the upside for the last I'd say 12 months at least. Lockheed Martin has been the same thing. Boeing has been beat up. It had a nice little rip there. I had Boeing in the 150 area, took it up to 170 and change. And I'm going to buy it lower. I mean, Boeing fundamentally it's basically like a government subsidy. They're like the only game in town when it comes to making airplanes. And but I want to buy it cheaper. If I see Boeing back down to like 125 or 100, I will probably buy it. Otherwise, I'm out of the trade. I don't have any exposure on it right now. I do own some shares of JetBlue. I'm going to see if this can kind of catch up with some of the other airline trades that have been going to all-time highs, like United Airlines and Delta. We go into Wednesday's trading. We have T-Mobile, which is probably one of the best-looking prices for a. AT&T I think is the value play. AT&T I've had from 17 to 22. Put on some more trades to see if we get up into like the mid 20s, like 26, 27, 28 would be good profit targets for me on AT&T. T-Mobile's way more expensive, but fundamentally it looks a lot better than Verizon and a lot better than AT&T. It's just expensive. It's like $250. Progressive, that's insurance, obviously. And I do have an income trade with a ratio spread. I'm willing to own it. Same thing with Chubb, which is the two insurance plays that I'm in. Hopefully, there's just no assignment. Hopefully, Progressive, like all other insurance companies that are just sitting with tons of profit. Hang on a second. Hang on. I just had a call. Give me 1 second. If I have to get pulled off the session here, that's okay. I just want to check something. Okay. Got a class. 11:30 today. We should be good. All right. Just finish up my thoughts here on earnings, and then I can go. Wednesday. So the big ones here: Tesla, Meta, Microsoft. Those are Mag 7, right? IBM. You want to bring out your kind of legacy tech. They're sprinkling in the AI talk. IBM stock has done pretty darn well, just on the hype. Right? Hype of this stock coming back in a big way since like summer of last year. I mean, still goes higher. And IBM since 2023 has gone up a lot. So it's up 94%, which isn't too bad for an old dusty tech company. Okay, looks like my webinar schedule is changing. All right. Let me get back to earnings, and I'm going to go. I got some other stuff going on in class coming up in a few minutes. So Tesla, Meta, Microsoft, big market cap swinging on Wednesday after close. And then we have Visa, MasterCard, Intel, Apple, UPS on Thursday. Southwest Airlines, again, another one. Caterpillar, SkyWest, another airline. Energy on Friday, PC on Friday, Wednesday, Fed. So look, for the way that I like to trade during the week with this much volatility expected with this much of a catalyst, today and tomorrow would be, if I'm looking to make some short-term plays, today, tomorrow's my time to do it. And then Wednesday, Thursday, Friday, I would say the market is essentially, catalysts everywhere, volatility flows everywhere. Just be careful. There's a couple of income trades that I'm looking for. I might be able to trade. If we have the expected move on Tesla, Meta, I want to take a look. I mean, the market definitely had a weird reaction to start things off this week. So going to Meta, for example, which is sitting here at all-time highs again today. Somehow the flows didn't even affect Meta, where it's like, yeah, we gapped a little bit lower, and here we are to fresh all-time highs. What I don't love is this is already a huge candle on a weekly move of, okay, we've already moved 37 points, and Meta on a weekly basis moves about 35 points. So in a day, we've already made a move for the entire weekly trading range. And then we throw earnings on top of that. I mean, could Meta blow earnings to the upside or downside? I don't know. I hate not taking the earnings trades because I like them just because they're like guaranteed catalysts, but nobody knows, So I can price it out. I can make it pretty inexpensive, but I'll do that. And if I find a trade that I like, then I'll post it in Pulver Alerts and I'll talk about it in live sessions, my final hour session that I do on YouTube as well. But I want to get those trades in like today, tomorrow, because by Wednesday, I have to have some of these trades running to see like, okay, Wednesday to Friday, am I getting the movements that I want? Wednesday to next Friday, perhaps, given the market's a little bit more time to move. But I'm looking for kind of that immediate reaction on earnings, for better, for worse, and I'll trade it probably both ways. So if I'm taking any earnings trades this week, most likely it's going to be a Tesla, a Meta, a Microsoft, maybe IBM if it prices out the right way. And then looking at UPS isn't awful. They typically see some decent moves. Visa, MasterCard, I'm already in and out of. I'm not going to get into those. I might look at SkyWest again because I do have some exposure on that one, the ratio spreads. Apple, maybe. Maybe. So probably 5 or 6. And then the energy plays. It's Friday, so I'd have to go out the next week anyway. But if I'm doing anything this week, probably Tesla, Meta, Microsoft, Apple, play the big guns and see where volatility sits. And then we have, like I said, Fed on Wednesday and PC on Friday. So a lot of reasons for the market to move, and that's the market. So it's a lot of stuff going on this week. I would say keep your head on a swivel, keep your eyes open, trade with good proper risk management because things could be a little crazy. I said this morning in earlier sessions, like undefined risk could be very, very costly on days like today. When you have such a big move and so little time, it will completely disrupt your kind of bread and butter trades. So that's why I tend to stick to defined risk, because that looks like a bit of an outlier type move. And we could have a lot of those. Last year we had those VIX events, and we could have more of those coming this year. So I don't think that's going to be unusual to see like high, wild volatility. But the one thing that I'm saying for today is the weekend is clearly the exposure, right? The weekend exposure is where prices, when we open up like Sunday night futures and the market rips aggressively one way or the other, that futures move can really disrupt Monday prices. We saw that happen August 5th. We didn't really see that happen over the holidays. That was just thin holiday trading where nobody was really participating. We just had a lot of swings. We had like 2 to 3% swings in the indexes over a couple of weeks. It was just a lot of random, highs and lows. But over the weekends, we can see a lot of disruption with the futures market that then carries into what Monday prices do in the the indexes. So, all right, I will let you go from here. And I'll be back. I should have some more live sessions this week. Obviously, I'll be on here for A1 Trading. I'm live usually at 3 p.m. for my final hour session on YouTube. So you can check those out anytime. They're always recorded and posted in my classroom or archive or whatever for my YouTube channel. But we'll do some more. I'm going to try to find some earnings trades today. I'm just going to get caught up on my webinar schedule, and we'll see you tomorrow. All right. Thanks, everybody. Thanks, team. And let's have some fun this week. It's going to be wild. Let's embrace it. All right. See you. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.